Good morning. I'm Jen Amos at Weiss Research.
I'm Andy Myers, and this is your morning market update for Thursday, September 8th. Stocks on Wall Street opened lower following some disappointing data on the labor market. The number of Americans filing first-time claims for unemployment insurance rose to 414,000 last week, and the numbers for the previous week were revised higher. Meanwhile, the 4-week average of jobless claims, a more accurate gauge of employment trends, jumped to nearly 415,000, its highest level since mid-July. The figures indicate that the pace of hiring remains sluggish. In a strong economy, applications for jobless benefits typically fall well below 400,000 for an extended period. And economists say the outlook for the labor market is unlikely to pick up anytime soon. Last week's August employment report showed zero job growth, signaling that businesses remain reluctant to hire.
The persistently weak job market is likely to be the main topic of President Obama's speech to a rare joint session of Congress tonight. According to multiple sources, he'll propose injecting $300 billion into the economy through a combination of tax cuts, infrastructure spending, and aid to state and local governments. The centerpiece of the president's new stimulus plan reportedly is an extension of the payroll tax cut for workers, which is set to expire at the end of the year. But he may also seek to extend that tax break to employers as well. White House officials believe the tax cuts have the best chance of passage, but they expect Republicans to oppose the other elements of the plan.
Turning back to this morning's economic news, the U.S. trade deficit shrank to a seasonally adjusted $44.8 billion in July. That's a decrease of nearly $7 billion from June's level, a much steeper drop than expected and the biggest percentage decline since February of 2009. The contraction was due mainly to a record level of U.S. exports, which helped offset the largest trade gap with China in nearly a year. The deficits for April, May, and June were also revised lower, which could mean that the final reading of second quarter gross domestic product will be raised from the previous forecast of 1% growth.
Investors are not just focusing on the U.S. economy today. They're also keeping a close eye on Europe. The European Central Bank followed the Bank of England's lead this morning and kept its monetary policy unchanged. The decision was not a surprise, but more important were the subsequent comments from ECB President Jean-Claude Trichet. At a press conference in Frankfurt, he acknowledged that the pace of Eurozone economic growth has decelerated and said he sees downside risks to the region's outlook. The ECB also lowered its economic growth forecasts for the Eurozone and said inflation risks are broadly balanced. This is a big change from the central bank's tone after its last meeting, when it seemed to be laying the groundwork for further interest rate hikes.
Following that news out of Europe and all the economic data today, we're seeing some strong reaction in the markets, especially in currencies. The euro is falling sharply against the US dollar and other major rivals, as investors now speculate that the ECB may actually cut interest rates to support growth. All the uncertainty in the global markets is pushing traders toward assets perceived as relatively safe. That's helping gold rebound from yesterday's declines, now trading at around $1,860 an ounce. And U.S. Treasury prices are also bouncing back, with the yield on the benchmark 10-year note dropping back around 2%. That's the latest from Weiss Research. Have a great trading day.